Hi everyone and welcome to my morning report analysis videos with me, Richard Perry, market analyst at Hantec Markets on Thursday the 10th of May. We've got a slightly more risk positive outlook for the markets. It seems as though that the news obviously has been that Donald Trump has managed to secure the release of 3 US prisoners from North Korea, and that sort of helps to continue to sort of paint a more positive picture around the geopolitical situation in the region, and certainly that is sort of playing out. But also, it's interesting that we've seen the dollar strengthening, tending to have strengthened on the back of the sort of more increased inflationary outlook from the move on Iran as well, and that has sort of helped to drive Treasury yields higher. Let me show you how Treasury yields, certainly on the 10-year, strongly higher yesterday, and the 2-year as well, moving out higher. But you had a slight sort of tempering of that move overnight, whereby we've seen the 10-year yield, just get that chart back again, just ticking slightly back lower again. And that's pulled the dollar slightly lower, and I say slightly, it's barely sort of really that moved today. But interest rate differentials are sort of once again a key factor. We've got inflation today in the States as a key factor to watch. But in terms of how markets are moving, we've seen sort of the euro dollar just gaining a little bit. And we've seen the dollar just slipping a touch. Nothing too significant though. What we have also had is this continued sort of underperformance of the yen, which is interesting. Again, a reflection of that improved risk appetite that we've got in the markets. The Kiwi dollar is an underperformer though. That's down 0.9% on the day. Now that comes in the wake of a pretty dovish sounding Reserve Bank of New Zealand last night. Possibility even, I suppose, of a rate cut, but certainly sort of bringing back its inflation and growth forecasts, and that has hit the Kiwi today. In terms of other markets, we've got the positive risk appetite running through the equity markets. The DAX especially finding that is a boost. And that comes as the S&P 500 started to sort of move to the upside again after a sort of a period of bit of a consolidation. It's seemingly sort of breaking higher again and looking at that April high once again as the next sort of key target area to test. But as I said, we've got US inflation data today is the key number that the markets will be looking out for. But before then, we've got a bit of a clutch of UK data. Industrial production expected to improve to 3.1%. You've got the trade balance as well, which is expected to deteriorate slightly. You've got the cable slightly under, sort of sterling slightly underperforming today. But the most important thing is the Bank of England, which at 12 o'clock is expected not to hike rates. And that, I can't believe I'm saying that, having sort of had the outlook of a few weeks ago where the market was almost nailed on for a rate hike in May. Not at all, not in any way at all are we expecting a rate hike now. And we're also sort of looking at the minutes of the vote, which is expected to still be, according to Reuters, 7-2 in favour of holding rates fire to voting for a rate hike. But will that be sort of moved back to maybe even unanimous in terms of keeping rates unchanged? That will be the interesting thing to come out of today. And also we're looking out for Super Thursday, which means the quarterly inflation report as well. What are the Bank of England views on inflation, which has been falling, and also disappointing growth in recent days. But inflation in the States is the key factor this afternoon. Core inflation is expected to rise slightly to 2.2%. Again, that's ever higher above the Fed's 2% target. And also headline inflation is expected to rise to 2.5%. So inflation in the States is expected to pick up more. So, now let's have a look at my chart today, which is Euro Aussie, which has been corrective and sort of rallied back towards that downtrend. But that downtrend again kicked in yesterday. Bear candle yesterday, again negative today. Looks like it's putting pressure once more back on 58 big figure, which is the sort of medium-term pivot of 2018. Now, the reaction low last on Monday was 58.30. It looks like the market is sort of dropping away to test that, but look at the momentum indicators falling away on the MACD lines. Stochastics not really having picked up, the RSI sort of hovering around 40. It still looks as though that this has got a test of 58 figure in it, and I think that that will be a key medium term test, because if you break that, you're then sort of looking at the uptrend, or the uptrend we've been in since March last year, so a 14-month uptrend. That could well come under pressure if we see 158 big figure tested, and that uptrend comes in currently around 56.90. So I think there is further corrective move within this trend lower that we've got, and it certainly seems as though rallies are being sold into. You've got on the hourly chart, let me just tighten that trend a little bit. Do we still hold on to it? No, we don't. But 159.65 is a pivot, and interestingly, again, that came into play yesterday with the high. So that is clearly a pivot throughout April and May that the market is looking at. So rallies are being sold into. Again, 65 seemingly, 65 to 60 to the high 60s, an area where the RSI failed. And I think rallies are a chance to sell on Euro Aussie. So zooming in, we've got today's reaction high, 159 figure area. Again, that's a bit of a pivot, isn't it? A little bit of a pivot area. 159 figure, old lows, old high, and new highs. So you've got a resistance area around that, which I think could be a chance to sell if we see a sort of rally towards that today. But I certainly think there is further scope for a corrective move within this market at the moment. So I wish you good luck in your trading today. Lots going on, and I'll speak to you later.